Hello and welcome to the ISE ETF and Index Outlook for September 3rd, 2012. This is Patrick Sresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange rate fund symbol SPY. It's now Labor Day is behind us, and we now have a market that is going into one of the most difficult trading months of the year in the month of September. At the same time, we're at a market that is consolidating sideways up near its year highs. Now, there's a lot of negative sentiment toward the markets here, which certainly can still unwind into a couple of short-term bursts higher. In terms of short squeezes, we're targeting that kind of 144 to 145 area if we saw this develop into a flag that breaks higher. But we won't deviate from our bigger picture perspective that the risk-reward proposition of the market here is very poor. And even if there is a couple bursts higher for a few dollars on the upside, the risk of being in the market is substantially worse than the upside potential, and so therefore we advise using any short-term strength as a way of lightening up on some of the more conventional positions. Next here, I want to take a look at the ISE Global Engineering and Construction Index, which is the symbol CVL. The ETF product trades under the symbol FLM. We more or less have seen this behave similarly to the broader markets after that short-term bottom in May and early June. The market has been overall recovering in this engineering construction space. Really at this stage with this consolidation we're seeing here down to the 222 area, we're at a sort of point where if this was just a pullback, it's going to find support somewhere within the next few points here and use that as a pivot to actually work its way not only back up to the highs, but maybe even try a burst higher to 240 or 245 on the upside. And to the equal degree, if the selling started coming in stronger here and we saw any damage down to, let's say, 215 or 210 down to the middle of the consolidation from June and July, that would be some substantial technical damage that would immediately put to question this breakout attempt. So really here, let's see if the bulls can dig in and use this as a support line to launch a new move. If we see substantial deterioration from here, then I'd leave this index alone. Next here, I want to take a look at the ISE Global Platinum Index, which is symbol ORE, and we continue to see the Platinum Index trading very sideways, trading all the way back down to its previous lows. We've already seen some pretty substantial recoveries in gold and silver, and it's interesting that Platinum hasn't really seen too much of an effect. It may be because many of these miners are associated with South Africa, which have had a couple of issues recently, but nonetheless we are going to be watching whether the support line comes in. If this by chance becomes a double bottom on the downside, it may emerge as a very interesting buying opportunity. Next here, I want to take a look at the ISE Cloud Computing Index, which is a symbol CPQ. And the Cloud Computing Index has had some pretty good strength in the last month of August as it worked its way to even higher highs. Like all these indices that have done this, the real test now is how they can hold support during short-term pullbacks. There might be even pullbacks temporarily below the 205 zone, which is the bottom end of that focal point. But so long as all sell-offs are short-term in duration, couple days, and immediately attract new buyers, and then we'll be looking to see whether or not the cloud computing space can actually recover. It would take substantial deterioration in the price below the 200 level, especially if it happened in a rapid fashion, for us to become outright negative on the cloud computing index. That was your ISE ETF and Index Outlook. Thank you for joining us.